Hello, I'm Austin Wilson, Director of Investments at Hixon Zuercher Capital Management.
I'm Josh Robb, Director of Wealth Management at Hixon Zuercher Capital Management. And today we're here to talk about the April and May economic outlook.
All right, so here's what we can say.
Yes.
We're now in May.
We're in May.
So all the "it's going to be May" memes,
They're
right now.
They're done.
Yeah, you could have had them last week, but now you're good. So we're in May. April was weird.
It was an interesting month.
It was choppy. It was volatile. Let's talk about it. So it was a wild month. And honestly, if you would have fallen asleep on March 31st and woken up on May, so 30 days in May?
30 days in May.
On May 30th, you would have thought, oh, that wasn't that crazy of a month, right? Because here's the returns that we had for the month. S&P 500, down 1.05%.
That's not great, but it's not horrible. Yeah.
Slightly down. Dow was down 3.04. The NASDAQ was up 0.01%.
Yeah.
Small and mid-cap stocks down 2 to 3%, kind of in there. Developed international stocks up almost 4. Emerging market stocks up 0.49 and bonds up 0.11. That seems like pretty muted performance overall for 1 month, but it wasn't at all.
No.
If you looked on April 2nd, President Trump, announced reciprocal tariffs on many, many, many countries. China famously over 100% on a lot of this stuff. That was April 2nd.
Mm-hmm.
Then a whole week of market fallout happens, and the market
very volatile days.
The market falls apart like we haven't seen since 2020.
Yep.
And we were actually on an intraday basis, so it didn't close there, but in the middle of the day, at one point, down 20% for the S&P 500 from all-time highs.
And the
Not from the
NASDAQ
beginning.
also.
The NASDAQ was also in a bear market. And then Trump announces a 90-day reprieve, kind of a pause, a pushback or a delay some of these tariffs, and try and get some, deals, in trade deals, really. Markets rebounded very sharply from that point, and then just kind of slowly chugged higher throughout the rest of the month to get us where we were. So it was anything but a muted month.
Yes, very
But
volatile.
the end of the month numbers look very muted.
Yes. And that is what I want to talk about, which is timing the market. And what you realized is that through all the volatile month of April, there were down days and some very big down days.
Big ones.
There was also some very big up days. And we saw kind of historical down and up days all within that 30-day period. And we know if we look back from 2015 through the end of last year, so a 10-year period, if you missed 10 of the best days, you missed out on 45% of that total return for the 10 years. And those 10 days happened within the most volatile time periods of that 10 year. So in other words, timing is just a really hard thing to do. Your better option is to stay invested, have a good plan that can help you weather the ups and downs of the market.
You let your asset allocation take care of that for you instead of trying to be in and out completely.
Timing is very hard.
Absolutely.
And another timing story, you and Chase talked about a alleged thief who...
Oh, I don't think it was alleged at this point.
Oh, it's no longer alleged.
Confirmed.
Yes. So at that time, an alleged thief who was pretending to be a representative
of an NBA player.
Asked to see some jewelry, and it disappeared. He stole it, and they caught him, and they had him in the hospital on watch because they were waiting to recover the stolen jewelry because he swallowed it.
Yeah. He ate it.
So it took 12 days. 12 days, and he remained in a hospital room under police watch, and they found, sanitized, and confirmed that was the missing jewelry. It was $780,000.
I mean, so here's the deal.
Yes.
$780,000 of jewelry.
Yep.
Do you think I could go get it at a discount? I mean, that had been in fecal matter.
It's used.
It's definitely used.
Yeah.
So, don't. If my wife gets a really nice piece of jewelry, just don't tell her where it came from.
Yes.
Okay? That's
what
I'm gonna say
that
there.
is fancy.
So that was the Florida news story of the month.
Yes.
The follow-up.
He's now facing charges.
Well, it's confirmed, of course. 12 days inside a man. It's like the Jonah of jewelry.
That's interesting. I thought it was a faster turnaround, but that's wrong.
All right, so the question you may be asking. We talked about what happened in April.
Yes.
Josh, of course, enlightened us on timing being very difficult and timing of jewelry recovery.
It's 12 days.
12 days, if you ever
Depends
need
on your
to know.
diet, maybe.
Lots of fiber, maybe it's a little shorter. The question is, what happens now for the markets? Mm-hmm. And here's the truth. I don't know.
No one knows.
Josh doesn't know.
Nope.
If someone says they do know, run from them to someone who will tell you they don't know.
Unless they say something like, long-term, the market is
See,
positive.
we're okay with
then that's
that.
a pretty safe guess when you go really long.
But in the short term, here's what I would expect.
Yes.
Volatility is likely to continue, and that can go both directions,
Yes.
up and down. But until there's concrete news on confirmed, signed trade deals with a lot of our major trading partners, the headlines are going to be moving the markets very quickly on anything. And I think that is going to continue. Markets, they sold off very sharply, rebounded very sharply. They're still not necessarily cheap, but earnings are coming in okay. But the uncertainty is what investors do not like, and we certainly have quite a bit of that. So while I can't for sure tell you what's going to happen in the short term, we do know over the long term that sticking to the plan is what works. But just, hold on, buckle up. It could still be a little choppy for a little while.
Yep. And then here's a carryover from April to May is the government announced that they're going to start collecting student loan debt that's in default or delinquency. And so that's something they mentioned in April, but in May 5th, they started that process.
Right.
And so this has been a 5-year pause that came out of COVID, that they pause all garnishments or collection of overdue or delinquent loan payments. That's estimated that there's about 5 million borrowers that are in default and another 4 million in some stage of delinquency. And that's, less than, I think, 120 days. And so all that to say is this has been coming. It's been talked about in the prior administration. President Biden talked about it, and then President Trump now, and they finally enacted that. And so the end result is the Education Department has to send a 60-day notice before they can start any of that. So they will be notified, and you can make some adjustments if possible to get back on track.
Yeah, absolutely. Well, thank you for listening. As we said earlier, Austin Wilson, Josh Robb here with Hixon Zuercher Capital Management. Please remember, nothing we talked about is a recommendation, but if you have any questions, email us at hello@hzcapital.com. And until next month, have a good one.
Talk to you later.
Thanks. Bye.